Hello and welcome to Cheppy Today. I'm Will and I'll be going through some of the most talked about topics in crypto. If you want to be kept up to date with the discussion, remember to give us a like and to subscribe.
It's dead like it's over, all we done. And all over, when we need 5K, my wife left me. It's a hand to love from my knees.
So it's been a little over a week since Bitcoin pumped and jump-started a market-wide rally. And while sentiment is still pretty much sky-high, prices for the most part have somewhat lagged, moving slightly more sideways of late. But are we being impatient or is there cause for concern? Well, according to Peter Brandt, a technical analysis expert, despite short-term outlook, Bitcoin still has the potential to go parabolic. Brandt looks to similarities in the 2015 market, pointing towards a particularly notable double bottom at the start of 2015. Within technical analysis, a double bottom is typically indicative of a reversal of trend, something which depicts a momentary drop, a rebound, another drop, and a subsequent rebound, often leading to a bullish phase thereafter. Brandt points out that this double bottom in 2015 was the very same that led to the 2017 bull run, in which many cryptocurrencies reached their all-time highs. Alongside his numerous credentials built up over years of professional trading, Brandt also gains points for correctly predicting the 2018 crash, stating back during Bitcoin's all-time high that a violation of parabolic advance leads to an 80% decline in value. Months later, our resident Nostradamus is proven right. Interestingly, comparisons with the 2015 market haven't stopped with Brandt. There have been a myriad of analysts pointing out that we're mirroring the exact same chart patterns, with those analysts noting that price history led up to the 2017 bull run. One trader, known as Josh Rager, also pointed this out, taking Brandt's supposition to the next level and suggesting that if the 2015 chart proves to be the crystal ball that many think it is, then we could be in for some more sideways action. Or as Rager spins it, an accumulation phase. Sounds less fun than parabolic, but I'll take these terms over crash and bubble any day. So Rager posits that Bitcoin took 216 days for accumulation, between the two opposing lows of the double bottom that Brandt pointed out. Based on this, Rager suggests that we could expect this accumulation phase to end on July 19th, 2019, giving the $1,000 candle that marked the beginning of the Bitcoin pump as the exact middle of those 216 accumulation days. Needless to say, this is highly speculative, but it's certainly an interesting comparison to make, especially with history rhyming as it often does. Rager also offered his opinion on what the more distant future might hold for Bitcoin, once again using price history for interpretation. The trader calculated year-to-year peak prices from 2011, 2014, 2017, and eventually to 2023, projecting a massive $150,000 per BTC in 2023. Rager bases this off the historical cycle between peak prices, revealing that each cycle had exactly 574 more days added to reach the next peak. This would suggest that the next bull cycle peak would occur on July 30th, 2023, and reach a price point of $150 per BTC. Not bad. In other news, it seems the bulls have won the battle for Bitfinex, as the exchange reported a 27% drop in BTC shorts a few days ago. The shorts rose to $23,000 before free-falling down to $16,000, marking a yearly low. As many noted, this fall occurred without much of an impact on price, leaving some scratching their heads as to what happened. Regardless of this, with fewer bets against BTC, this can only really mean that bullish sentiment is continuing to rise. Tom Lee, co-founder of Fundstrat, recently added to this rising sentiment, explicitly stating that due to breaking through the 200 moving day average, Bitcoin was firmly back in a bull market. Lee also attributes the weakening of the US dollar and whales plunging into the market as further proof of an end to the bear season. But as with everything, to a yin, there must be a yang. And providing that equilibrium is the fact that Bitcoin may well be overbought. This was the suggestion from Bloomberg's market analyst Mike McGlone, who offered up the Global Strength Indicator, a tool for measuring Bitcoin volatility, as proof that Bitcoin is at its most overbought levels since the 2017 bull run, alluding of course to an imminent crash, reminiscent of the 2018 downturn. However, equilibrium. It'd be a shame to end this on a bitter note, so I'm not going to. Speaking in a recent episode of CNBC's Crypto Trader, CZ, the CEO of Binance, relayed that trading volume, the number of transactions, and the number of orders all hit an all-time high, citing even more orders than back during the last alt season, in January 2018. While CZ noted that he didn't want to make any predictions, he pointed out that he remains bullish for the future. So while there are some short-term factors that may lead us to head sideways for a while, it seems the overall sentiment is for a rally up. And to be honest, it's about time. But as always, we'd love to hear your take on the topics discussed. Do you think Bitcoin will continue this rally? Will we head sideways? Or are we looking at a crash waiting to happen? So leave us a comment, leave us a like, subscribe, and we will see you next time.